Mr. Ade, the market is flying. My equity portfolio is up 30%. I told you banking stocks were the move.
I see you're enjoying the ride, Tunde. But let me ask you, have you taken any profit?
Why would I? It's going up. I'm letting it ride.
I've seen this before. When markets are high, that's the best time to trim some gains. Not exit completely, just rebalance. My target mix is 70% fixed income and 30% equities. But when equities rally, the balance shifts. Say it becomes 50-50. That means equities have grown faster than fixed income. So I sell some equities while they are high and move that into fixed income.
So you're locking in gains?
Exactly. Sell high, buy low. I'm not timing the market, I'm managing the risk.
But won't I miss more upside?
Or avoid the downside. Markets don't rise forever. Rebalancing keeps you disciplined, not reactive.
Okay. Maybe I'll take some profits and shore up my fixed income. Just a little.
That's the spirit. You don't need to swing for the fences to win. Rebalance wisely. Protect.
Join the session. This morning we'll be looking at what the equities market did last week and pointing to the direction you should be looking at in the new week. During the week ended August 15th, 2025, the Nigeria exchange witnessed a mixed performance across the all-share index and the NGX 30. The NGX all-share index opened the week on a positive note, maintaining stability between Friday and Tuesday before recording a gradual decline from Wednesday through Friday. This is attributed to mild profit-taking activities, waning investors' sentiment towards the close of the week. Similarly, the NGX 30 mirrored the ASI movement. It inched upward at the start of the week, peaking on Tuesday, but subsequently declined towards the end of the week. The index closed around 145 basis points, underscoring the cautious trading stance adopted by investors. Early gains were driven by renewed interest in large cap stocks, while midweek, market activity slowed down, leading to profit-taking and sell-offs. The week closed on a bearish note as selling pressure outweighed bargaining hunting. Looking at the distribution of value and volume traded across the sector for the week under review, the strong dominance of the financial service sector lingered, which accounted for 81% of the total volume traded. The financial service sector continued to attract the highest level of investors' interest, reflecting its depth, liquidity, and diverse product offerings. However, the oil and gas and agricultural sector showed marginal activities, highlighting limited momentum in this segment during the week, acknowledging the fact that it's had a share of 4% for the oil and gas and agriculture 4% as well. While the others, which include the conglomerate, the IT sector, accounted for 11% of the total traded volume. The exchange closed the week on a bearish note as the all-share index depreciated by 0.77%, settling at 144,000 points from 145,000 points it recorded the previous week. Despite the weekly decline, the year-to-date return remains strong at 40.52%, up from the opening year level at 102,926 points. A total turnover of 8.56 billion shares exchanged hand, valued at 99.94 billion last week, as compared to what it did the previous week, where 8.7 billion shares worth 134.58 billion exchanged hands. The financial service sector dominated the activity with 6.92 billion shares worth 56.72 billion, contributing 80.75% and 56.75% to total equity volume and value, respectively. The oil and gas sector followed with 387.65 million shares, valued at 8.5 billion, while the agricultural sector recorded 315.54 billion shares, valued at 6.02 billion. The three most traded equities for the week were Universal Insurance, Linkage Insurance, and ICO Insurance, accounting for a combined 2.79 billion shares, valued at 6.62 billion. Together, they represented 32.54% of the total equity volume and 6.63% of the total value. Out of the 5 major sectorial indices under the lead capital coverage, Nigeria Insurance Index closed positive with 8.21% contribution, while the banking index, the consumer and the industrial, as well as the oil and gas, closed in the negative. Speaking to the dividend qualification window, as at today, we have BOA Foods, we have Presco on the dividend qualification window. BOA Foods, the QD is 21st August 2025. So if you're buying into that ticker for the remaining part of the week, you be sure to have access to the dividend already declared, as well as Presco. Presco declared 20 naira for interim. If you're buying into Presco from now till 7th November, you have access to the dividend. However, on the dividend payment tracker, we have Presco still on that list. For the final year 2024, 42 naira was declared. The payment date is tomorrow, Tuesday, August 2025. And for Okomu Oil, the interim dividend for Q4 2024, the payment date had already passed. So, but if you haven't gotten your payment, do well to reach out to our customer service team and we will guide you accordingly. So, looking at our top stock picks for the week, we have carefully curated a list that captures sectors under the lead capital coverage. Also, we have expanded our coverage to 9 sectors where you have both the banking, the insurance, the industrial, the manufacturing, the consumer, hospitality, aviation, oil and gas, as well as the telecommunication. Under these different sectors, we have carefully picked out selected stocks for the different sector for your interest. Then looking at the stock recommendation, this is an extract from the general list that has been sent out already, where number 1 to 18 represents our buy recommendation, 19 to 30 represent our hold recommendation, that's if you have them in your portfolio, while 31 to 34 represents the sell recommendation. And our sell recommendation is based on the fact that we expect our clients to take some profit, realize some gains from these tickers that are already trading at their all-time high. What are we expecting for the remaining part of the week? So last week, we saw the Nigeria stock market ended the 8-week strike as the much expected market correction commenced. Selling pressure outweighed buying interest as investors cashed out on their gains. With almost all major results out, the investors now await the Q2 half-year results for Access Bank, GTCO, Stanbic, UBA, and Zenith, which may not overly excite the market as the anticipated result may have already been priced in. Indications are that these results will be announced before the end of the month. This week, we anticipate that the present correction will continue, primarily driven by stocks that have severally surpassed their 52 weeks high mark. This may likely present buying opportunities for long-term investors as the market will present attractive entry prices. Consequently, if there are no adverse shock this week, we anticipate that the markets may likely end the week slightly in the red, with the NGX All Share Index hovering around 142,500 to 142,000 points. At this juncture, I leave you in the hands of our fixed income analyst.
Good morning, esteemed investors, and thank you once again for taking out the time to join us on this program. Very quickly, we'll look at what's played out at the fixed income segment of the market. But before we dive into that, just like we emphasized last week, and I'm certain that a number of our clients who had listened to us and they've acted as advised, will definitely be smiling right now. As you know, we emphasized last week that this week last week rather, we'll be going on a campaign of reviewing our clients' portfolio and then making recommendations to them for those who have made significant profit on their equities investment to diversify. We saw a lot of our clients, listen to that advice, and they had to take out profits. And this is still a call on all of our clients. You've made significant gain on your investment, and you are hoping that this might continue. That hope might not come into realization. So it's just a call. Our RMs, our advisors, everybody will be reaching out to you this week. If you've made significant gain, there's nothing stopping you from looking at other segments of the market to capitalize or to bank in your profits. So to begin with, for the fixed income markets, we saw that at the open market, so at the open repo markets, rates significantly went up, and that was because we saw system liquidity fall into the negative zone last week on the back of the funding pressures. We saw that there were a lot of outflows in the system last week, which made liquidity, which made liquidity that opened the week at about 300 and something billion, closed at a negative of 272 billion naira. So we saw that having a significant effect on the repo rates. That's the open repo rate and the overnight rates, which advanced by 560 basis points and 540 basis points respectively, to close the week at 32.10 and 32.40. And for those who have continuously followed us on this program, they would realize that once the funding rates jack up, it definitely has an effect on the entire market. And as a result of that, we saw the Treasury bills market closing on a bearish note, because we saw some of the big players in the market having to exit their positions, particularly to raise liquidity. And these big players are mostly the banks. We saw a lot of sell-offs last week, the mean ed particularly for those that positioned sometimes at the beginning of the year. We saw some sell-offs, which eventually led to the average yield across the entire curve increasing by 5 basis points to close at 17.96%. We anticipate that this might slightly continue in the midterm because liquidity is still on the negative zone. But last week, we saw that the NTB auction I held last week also saw a slightly inching up in the stop rates, with the 180 and the 91 and the 181 day bill closing on a flat note. And we saw on the 364 day, we saw a marginal advancement of 62 basis points to close at 16.5%. Bond market as well saw a similar trend, with sell-offs dominating the entire curve, both from the short end to the mid end and the long end. And the sell-offs are largely due to the liquidity pressures of the system, like we had mentioned. Liquidity was very, very weak throughout last week. So we saw that fueling a lot of sell-off to raise funding, to meet funding gaps, mostly by the banks. So as a result of that, we saw that across the various tenors on the short end of the curve, we saw yields advancing by 6 basis points, while at the mid to the long end of the curve, we saw an advancement of 22 basis points in the yields last week. Maturities are so most of the trading volume, the 2029s, the 2030s, the 31s, 32s, 33s, 34s, 37s, 38s, and the 53s. As you can see, it's actually well positioned across both the short end, the medium end, and the mid end, and then the long end of the curve, which means that the sell-off we saw last week was across the entire curve, and it wasn't dominated at just a particular segment of the market. But at the end of all of this, we saw that the average yields increased by 11 basis points. It closed at 16.62%. So just like my colleague rightly mentioned earlier, when you see market corrections like this, it just gives you an opportunity to position as quickly as possible. We had emphasized, please, can you? Yeah, we had emphasized the other week that we've seen a marginal, so we've seen a consistent decline in the stop rates from as shown on this chart. We saw the upward movement, then down to around November last year when we peaked, and since then we've seen the downward slope. So when you see marginal correction this way that yields are slightly going up, it just gives investors the opportunity to position, and as such, our various product offerings, they've been well curated for you to position in. But before we get to that, let's also look at what transpired at the foreign exchange market. Foreign exchange market, the volatility we've seen in this market still persists. However, at the official the NAFEM window, we saw some slight appreciation in naira, where the naira closed at 1,530 naira 42 kobo, as against 1,534 naira, it's 3 kobo it closed the previous week, which means the naira gained by 29 basis points. However, when you look at the forwards contract, which actually tells us about the confidence that investors pose in naira or have in the naira, we can see that the volatility is still there with the market still pricing naira and forwards contracts as high as 1,975 naira 35 kobo. We might say naira would not get to this point, but this is just an arbitrage, an edging opportunity rather for investors. But as we've always emphasized, developments in this market will be brought to you on a weekly basis, and when we can see that stability, the firm stability we're looking at, will also bring that to the notice of all of our investors. So very quickly, in all of this, our various products are such that they've been well curated for all investors to position in, because we can come here every Monday, and then when there's no call to action, when we are not showing our clients what they should be doing, I feel like we strongly believe that this whole program or this whole session will be an exercise in futility. So as such, our various products will continue to emphasize on them to let our clients know that these are opportunities that are available in the market where you can position in. Beginning with our lead fixed income fund, it's a fixed income fund as the name implies. I did invest mainly in 70% of its NAV, so net asset value, invest in fixed income instruments, and then the remaining 30% goes to money market instrument. And the reason for this is so that we can balance out the weighting of the fund. We're not overly exposed to one end while leaving out the other segment of the fixed income market. The risk profile of this fund is low, as it is a fixed income fund, such that you can enjoy capital appreciation and as well also enjoy dividend payouts. The fund pays out dividend twice a year, as the interim, which is paid half year, and then the full dividend pay the full year, which is paid at the end of the financial year. However, there's a minimum holding period for this. When you come into the fund, we expected that you stay in the fund for a minimum of 90 days, and thereafter you have the access to easily exit or to even come back into the fund. In terms of the performance, because we know that that's the catch for every investor. If we are proposing a fund, what has the fund done in terms of performance over the years? And for this fund, we're very, very delighted to emphasize on the fact that since inception, this fund has done well over 200% in terms of the return. The fund, when the fund was launched, it was launched at the unit price of 100 naira. And so this morning that I'm speaking, the fund is currently around 261 naira, which means that we've done almost 260% return on this fund. And that's to tell us that investors that are positioned since inception, they are definitely enjoying. But looking at the current year that we had in year 2025, the year-to-date return, when you analyze that, it comes up to an annualized yield of 18.73%. This is quite impressive when you look at other fixed income funds in the market. So it's just a call for all of our investors. And the reason we're emphasizing on this is seeing the massive bullish run in the equities market. It will be a disservice and it will be unfair to all our investors if we don't show you where you can put in your profit when you take them out of the equity. At least in the meantime, when the market corrects itself, and then it gives you the opportunity to reposition. Also for our lead balance fund, it's a mutual fund as well, but this invests equally in the equities market and the fixed income markets. The risk premium is the risk profile is medium, as you are likely going to be exposed to the volatility in the equities market. But that's why we are there. We consistently monitor this fund to reposition ahead of any major market shock. And then in terms of the year-to-date return, it's currently at 43.27, not 40.18, 43.27% year-to-date return. And they also lead dollar fund. We mentioned earlier the volatility in the foreign exchange market persists. And as such, we know we have investors or we have clients who are also looking at, rather than being exposed to volatility in the official currency, let me look at other opportunities that I can invest into. And that's where our lead dollar fund comes into play. It's a dollar-based fund, invest in dollar-based assets. The risk premium is also low. And in terms of the annualized yield on this fund, we're looking at about 9%. And that's very, very attractive when you look at other fixed income, dollar fixed income funds in the market. Then finally, our fixed income products. So in all of this, we know in the past 2-3 weeks, we've seen consistent call from our clients that, okay, I don't want to look at the mutual fund. I'm just looking at something I can put in my money for maybe 90 to 180 days, and then I exit to reposition in the equities market. You know, that's where our fixed income product comes in, which which is called the Lead Gazelle portfolio. It's a fund that allows you to fix your capital for as low as 90 days and so as high as 365 days. The catch for us is, or what we pride in, is that the interest rates we offer our clients are very, very competitive, because we've taken our time to run a survey across the entire market to see what competitors are offering, and we are confident that we are well positioned in terms of rates and in terms of returns. So all of these products are there. You know, you can always reach out to us, as our RMs will be reaching out to you. You know, you can also make further inquiries, and as well, you can also make use of the customer service line, and then the email addresses, the various email addresses to reach out to us. I will be more than happy to provide guidance and clarity as the case may be. With this, we've come to the end of the presentation this morning, and it's time for questions and answers. You have questions that you would like us to provide answers to, clarifications. Okay, we have we have a client who says that I'm still yet to be credited with my Fidelity Public offer share subscription for more than 1 year for the exercise. Thank you so much, Mr. Nweke, for this. I know that you brought this to the front burner a number of times, and we've assured you that we are currently engaging with the registrar to see how we can resolve this. Please, after this call, we'll also reach out to you with an update. I know that we have an update from the registrar concerning the Fidelity Public offer. But like I said, we'll come to you after this call for that. Thank you. It's now time for questions. You may type in your questions in the chat box, or as an alternative, you can signify by raise of hand to ask your questions directly. Floor is open for questions, comments, or if there's anything you would like us to also incorporate into this session. Maybe there's something you're looking out for that you would like us to also bring on board that we currently don't capture. You know, just as a form of feedback for us to also put our presentation in more proper shape. So this is the segment that we have right now. Okay, any information or advice on CHAMS?
So currently we have saw this recent increase in transaction in the flow. So we advise our client that now that be going on. We have seen a lot of other companies that are listed or that have requested for additional capital, they have done well. So we encourage people to pick up shares. It's a good one. The price have increased and the discount is somehow so people can, is either you sell out your position if you don't have fund, and then you use that fund to pick up your rights. That is what we have been advising our client. At least the margin of 1 naira is good
for clients to make. So for people that have the right, they can sell and then use the capital to fund their right issue. So that's fine. How far with the insurance parties? As we have rightly said on Monday when I presented that for people that have made significant appreciation, they can take out their capital and look at other products that we have, a raise of product and reinvest. What we have seen that there are a lot of people that are in the markets, they are speculators that they come with large volume, they make significant gain and they sell off. So from the instruction that have come from NACOM that by July 2026, that is the deadline for all insurance companies to recapitalize their capital base. And what we'll be seeing that there will be a pullback, and then we have known that rightly that the price will also bounce. But for now, we are in a pullback. Let's wait. Let's see what is going to happen. For anybody to come in now, let's wait till Wednesday to see what exactly the direction that is the market is going. So, but for the insurance, there will be capitalization, and the price can never remain the same. There will be a lot of capital appreciation. They will not raise capital at this level that there is 50 kobo or 1 kobo. No, it's not possible. So there must be a marginal increase in their price for them to be able to raise significant capital from the market. So please, any reason custodial insurance, yes, we've seen that as long as their price keep on increasing and their earning per shares is not increasing, the price earning ratio will also depress. That is it. We have significant advice our clients when the PE ratio was 1. That is when we told majority of our clients to go in. And we have seen that significantly the price have increased, and then the PE ratio also will depress as a lot of that. That's not a problem. And we expect them to also come out with good results as we enter into the other quarter of the year. So that's our expectation. So there's no need to worry about that. So I would like you to share more light on the fixed income. So for the fixed income, so we reach out to you. We have with Lawan, we reach out to you there. We advise you on all our products as regards that. So any update on Airtel proposed private? For now, there's no any information in the market for now. So we advise once there's any information. I observed the trader are not available for a couple of days. So we sent mail to our client. There was a downturn during the week, and we resolved it immediately, and we sent out information to all our clients via our channel of communication. So the last question, I mean, compared to the industrial average, giving it high EPS versus the payment in the industry. So the question, do you mean on custodian or which of the? So give it the high EPS. So what we advise our clients is that for you to go into any sector, look at the P ratio, the earning per shares, and compare with what the company is doing. Is it above or what is below the average? So if the performance is higher compared to its peer, that is a good signal for you to want to key into that company. So that's comparing what the company is doing to its peer, and if it's above, that's an opportunity. Any support for us to take up? Yes, we've sent message to our clients and I've advised them that fill the form. Let's look at what is happening in the market. If there are opportunity, a significant appreciation, you can sell off and use that fund to pick up your rights. That's what we have advised our clients. We have them to fill the form. We send the form to them to fill. Let's hold on. And if there's any opportunity, capital appreciation increase 2 naira, 3 naira gain, you can sell off some of your ODs and then use the money to fund for your right position. That will mean a good significant gain both from the discounted price of the offer, and then you make significant increase by selling some of it on the floor.
Okay, we have someone stand up. You can give me the permission to unmute and ask questions.
So Mr. Adike, the floor is open. You can ask your question. Mr. Adike, the floor is open. You can ask your question. Can unmute, sir.
Okay. About insurance
company. What is the top 10 insurance company? Because according to the publications yesterday or today, because they said if you don't recapitalize, if you don't, you can hear me? Yes, sir. Yes, sir. Yes, you can hear you, sir. So thank you. I guess your question is regarding the insurance. As we have rightly said, since last year, December, we told our client to position, and we have seen a significant appreciation, and we told them that take out your capital, and then we monitor what will happen in the market. And we have seen a lot of pullback during the week, a sell-offs for people that are speculated that they have seen significant gain. And as we have expected that trend can continue Monday, Tuesday, and people will come back again to position ahead of the capitalization exercises. So what we expect is that July 2026 is the deadline, and we are going to see significant activities in the insurance sector, whether merger, whether acquisition. We are going to see significant activity. So one needs to be very careful and smart in that space going forward. How can some of us who do not have shams shares buy? So what we are expecting is that there is OTC, over-the-counter trade, for people that does not want to take up their rights. They also have that right to sell their rights on the floor. So for our clients, we told them that if we see that opportunity, we help them to pick and they will pay. So you have that opportunity for people that does not have that right. They can also buy on the OTC floor of the exchange if it is available for people that does not want to pick their rights. But what we have seen is that since the price has appreciated significantly on the floor, nobody is going to forfeit their rights they would rather sell what they have and they use their fund to come and buy on the floor. But we have advised our client that if there's opportunity, we let them know at the OTC for us to pick the right for them and they will pay the money for the offer. How can we have it? So we also plan that for the new tax law. We have seen a new significant laws that have came out from the NTA that going forward for any transaction that's above 100 million, there's going to be that gain tax. So we are going to do a session for that to educate our client on the new laws and how it's going to impact their investment going forward in the year 2026. So we rightly inform our clients. So good morning. I requested to reactivate my account. So Mr. Olati Ejo, we are going to reach out to you, then we help you to reactivate your account. So it's a good buy. So what we have seen is that they want to increase their activities, and we advise our clients. We expect them to come out with good results based on their proposed projects, and it's going to help their top line and as well as their bottom line. So it's a good buy for people that are interested in buying the right. So Shams is a good buy, and we have also recommend for people to take position in the stock. So thank you. We really appreciate our audience. It has been a wonderful section and a particular one we had today. So we wish them a very good return on their investments during the week and beyond the week. Thank you for being a wonderful audience. You have a blessed week. Thank you.